It's time to do business again. We have another 55 minutes to go around the world of business. And here's what we have prepared for you. In Kenya, the 2025 bond auction is open. Borrowing of 66.65 billion Kenyan shilling is what's at stake. And Ethiopia has a record high exports revenue from coffee, $2.65 billion. President Trump is at it again. He has 5 African leaders and is holding a special meeting. Welcome to the program. I'm Ini John Mekwa. Once again, let's do business starting from the global scene. Oil prices declined moderately as investors weighed on the potential impact of U.S. President Trump's tariffs on global economic growth. So we look at the numbers for this afternoon. It's still a red from what we had in the morning, and it's dropped from the $70. So it's $69.96, having lost 0.3%. WTI of the United States is also down 0.5%, that's 0.5%, $68.06 a barrel. On Wednesday, Trump threatened Brazil, Latin America's largest economy, with a punitive 50% tariff on exports to the U.S. after a public spat with a Brazilian counterpart. He also is announcing plans for tariffs on copper, semiconductors, and pharmaceuticals. And his administration sent tariff letters to Philippines, Iraq, and others, adding to over a dozen letters issued earlier in the week, including for the U.S. supplier powerhouse, South Korea and Japan. Policymakers remain worried about inflationary pressures from Trump's tariffs, with only a couple of officials at the Federal Reserve's June 17-18 meeting saying they felt interest rate could be reduced as soon as this month. The minutes were released yesterday and Wednesday. U.S. crude stockpiles rose while gasoline and distillate inventories fell last week. According to Energy Information Administration, gasoline demand rose 6% to 9.2 million barrels per day last week, and OPEC Plus oil producers are set to approve another big output boost for September as they complete both the unwinding of voluntary production cuts by 8 members and the United Arab Emirates' move to a larger quota. And to metals, gold prices rose on Thursday, supported by a pullback in the dollar and the prospect of U.S. interest rate cuts later on this year, while investors are awaiting more details on U.S. President Donald Trump's trade policy. So we see the numbers opposite of what we had at this time yesterday. We see spot gold 0.5% up, $3,328.23 per ounce. Same goes for U.S. gold. It's also up by 0.5%, 3,336. So we see yesterday we had about 3,333. So added a bit right there. Spot silver changed the color also 0.7% in the green, $36.59 per ounce. Platinum is up almost 1%. That's a huge move compared to where we were this time yesterday. So it's $1,359.65, and palladium is also up more than 1% at $1,117.93. So the dollar opened eased 0.2% against its rival, and of course that makes the metals cheaper for those who are holding other currencies. So that's part of the reason we saw a rush back there. And Trump also issued tariff notices to 7 minor trading partners, adding to the 14 issued earlier in the week, specifically on Monday, also set to take effect August 1, unless agreements are reached. However, financial markets have largely shrunk off U.S. President Donald Trump's latest tariff salvos, with global stocks advancing on Thursday. Will tell us more about that. Minutes of the meeting of 17th and 18th came out yesterday, and it showed more direction to what we expect from the Federal Reserve. And conversations are moving along at the 2025 Standard Bank Africa Unlocked Conference, and financial institutions are exploring innovative payment solutions to boost trade. Ladi is still there and sent in this.
With what's been said so far, I think it's quite clear, and it's quite clear to all of us that Africa's potential is unreal. It's enormous. It's enormous in terms of what we can do from a trade perspective, in terms of the Africa Continental Free Trade Agreement. What's happening globally has created an opportunity for Africa to look more inwardly and focus on building capacity and look at the innate potential that we have in our young population and see how we can harness that to create a development agenda and implementation program that actually benefits this young population that we have. We've seen that we've got some challenges with tariffs across the continent. We've also got challenges with the non-tariff regimes that exist, which make it very difficult for goods to move across borders. Lots of documentation, lots of bureaucracy. What we need is to open up the borders. And from a banking perspective, we do want to see ourselves also being a very key player. As you heard from the speaker from African Bank about the PAPS program, we want to be part of that payment system revolution that's taking place. Trade can only be facilitated by effective and efficient payment systems that allow for the movement of cash and goods and services across borders in the continent.
It was important for us as a country.
Well, that conversation that Ladi sent in was done with the head of Africa Regions and Offshore, Standard Bank and Business Commercial. Meanwhile, earlier today, we spoke with Dr. Boniface Chizie on the IMF recommendations, especially as it has to do with the social net programs, which the IMF believes is missing, the missing link to transforming some of those benefits of economic transformation or reforms of President Bola Tinubu into welfare, better welfare package for Nigerians.
It was important for us as a country is that we have to be a bit pro-poor. This is what's going to be very important. If you look at, talking of transfers, to the poor and the vulnerable, now that's going to be massive. What's the population of Nigeria that has been designated as poor? It's about 42%. And you have a population of about 200 million people and counting. Now, so where are you going to get the money from to do these transfers? And even when you make the transfers, to a large extent, it's like giving somebody a fish. We should try and teach people how to fish. That is more sustainable. So my concern is that, yes, these things, it's very easy to just read them off glibly, but then when it comes to implementation, you see, we are strapped. They've also told us that we have difficulties with challenge in terms of our revenue flows. So where are you going to get the money to begin to do those transfers? And besides the fact that we don't even seem to have the system in place, to even effect the transfer. Our population, what's our population, and so on and so forth. Now, the poor who are deserving of this, where are they in this country?
And so even as Ladi attends that event in Cape Town, the conversation around cross-border trading within the continent is persisting now. There are some individuals who believe that perhaps cross-border payments could be done easier, more efficiently with stable coins. Yes, but let's delve into this now with Jason Marshall. He's the Chief Operating Officer of Yellow Card Financial right here in the studio. Hi, Jason. Good afternoon and welcome to the program.
Thanks for having me.
Great. So emerging markets, including Nigeria, but Africa at this time, especially with President Trump highlighting America first. So Africa is looking at how to present a coordinated front. One of the ways is through AfCFTA, but we need to increase trade within the continent. And there are some individuals who think perhaps the way of stable coins might make it easier.
Absolutely. The current cross-border financial system was not built for emerging markets. If you send a transaction from Nigeria to, say, Cote d'Ivoire, the transaction goes to New York, maybe New York and London, before coming back to Africa. There's one or two American or European banks as middlemen taking their fees, and the transaction, frankly, is slow and expensive. What stablecoins and blockchain technology allows us to do is get rid of the middlemen. There's a neutral playing field, a neutral system, where we can send value from one entity to another directly. And that creates a lot of opportunity in intra-Africa trade payments, as well as trade payments to other parts of the emerging world.
But the crypto space still needs to win a lot of trust, even within, countries, before we can look at the way of, cross-border.
So stablecoins are a very unique and important segment of crypto. Stablecoins are backed one for one by audited reserves held in US Treasury bills and cash in American and European banks. They're called stablecoins because if you look historically, their value stays at $1. So these are not speculative assets, these are tools for solving cross-border and other payment problems.
Okay, but stablecoin matched to the dollar in a country like Nigeria, that's Naira.
Yes.
So, I mean, you still have to deal with that.
So if a Nigerian company has to pay a supplier in India or China or South Africa, that supplier is not accepting Naira. Maybe that'll change someday, but for now, they're not. So everyone's chasing after a limited supply of hard US dollars. With stablecoins, that supply is unlimited. And so there is a very liquid market where people in Nigeria turn their Naira into stablecoins. And then everywhere in the world, those stablecoins get turned back into the currency they want, whether it's Chinese yuan, South African rand, Kenyan shilling, Mexican peso, euros, dollars, anywhere. So the domestic payment problem is largely solved. Nigeria has one of the most advanced real-time electronic banking systems in the world, and had it, frankly, before the United States. But in the cross-border space, there's a lot of inefficiencies, not because of Nigeria's problems, because the system wasn't built for Nigeria or any other emerging market. And that's why it's expensive and slow.
So I know that there are conversations with AFCFTA connecting to PAPs now,
Sure.
So that's supposed to solve that problem and eliminate the need for dollars and stuff. I wonder how you put that side by side with this message of stablecoin.
Sure. Stablecoins in their various forms and blockchain technology, we think someday will be part of the infrastructure of PAPs or any other similar system and process. What we're really talking about is some really technical, nerdy financial plumbing. And most of our banking system relies on financial plumbing that was set up a long time ago. And the technology's advanced so fast. It advances fast every day. And we simply have better tools. So at Yellow Card Financial, we simply want to use the most modern tools possible to enable participants in the financial system to be able to move money faster and cheaper in a more efficient way, in a scalable technology way.
How popular and accepted is stablecoin within the continent? Because at this time, we're trying to push intra-African trade.
Massively popular. Our biggest problem is keeping up with demand. And it's simply because we can do this technology, and Yellow Card's a path to this technology, simply can do things faster and cheaper. Our clients, many of whom are businesses and enterprises, are making payments to the UK or to Ivory Coast or to South Africa or to China, often same day. And China sometimes T+1 because of time differences. Through the traditional banking system, these same payments take 2 or 3 days. And we often save 20, 30, or 40% of the cost. And so what we find is there's a lot of smart people in Nigeria. If there's technology that works and saves their business a little money and saves their business time and working capital, people figure it out. And so this is very popular. The issuers of stablecoins are the top 20 holders of US Treasuries on the world. This has become so big that we're seeing interest globally from giants. JP Morgan Chase, the largest non-government bank, just announced a massive stablecoin initiative. Earlier today, Ant, which is part of the Alibaba Group, one of the biggest companies in China, just announced a partnership with one of the biggest American stablecoin companies. We announced a partnership with Visa to help use this technology in Africa. So I think the popularity is soaring because it's better tech.
It's better tech, but what about when the tech is not there? And then, we also see stories of digital assets and some frauds, that happen around it,
Yeah, absolutely. Well, I think we're not talking about necessarily buying crypto to get rich, buying crypto speculative. There is no quick get-rich scheme. If someone's going to say this will make you rich quickly, it's a Ponzi scheme, it's fraud, right? What Nigerian companies and some business and enterprises and some individuals are doing is they're moving from Naira to stablecoins for about a minute and a half or 5 minutes. And
just for the transaction, that's
just for the transaction.
Okay.
So if you think of it that way, it's a tool. So they're using stablecoins and blockchain technology. And by the way, because it's on the blockchain, they can trace their transaction publicly, which is hard to do in the traditional financial system if you're not within the bank itself. So it's just a tool to move money cheaper and faster.
As small businesses in this would need some level of enlightenment, you know, for small businesses especially.
Our biggest competitor is actually the informal market. So there's a massive informal market, especially in Nigeria, and there's people who are really savvy in this space who are working with small businesses. Now, the small business may not understand the nuances of what's happening, but what they know is they gave Naira to this person they trust, and their supplier gets paid in 12 hours in China.
Well, there's a third party in between for them.
There's somebody, you know, Nigerians are going to find a way to make a little, you know, to make a little something helping somebody use some tools, right? But no, the small businesses are adapting this rapidly. Some directly, some indirectly with helpers.
Okay, so for you now, you think this is the way to go, it's a safe way to go, it's faster and it's cheaper, the way of stablecoin?
Absolutely. And it's not just me thinking that, right? It's JP Morgan Chase, it's Visa, we announced a partnership with PayPal earlier. It's major enterprises and small businesses and everything in between.
All right, we'll see how that goes. See how much competition that will give to, you know, although you said PAPS should be able to absorb, you know, because the message of PAPS is really blowing up at this time, especially, you know, everybody trying to bring the African countries together, you know. But anyways, thank you so much for your time and enlightenment.
Thank you very
Jason
much.
Marshall, Chief Operating Officer, Yellow Card Financial.
Thank you very much.
All right, let's take a break now. When we come back, we'll head to the markets with Will Ibon. Please stay with us. Welcome back. It's still Business Incorporated, and we head to the markets now. And I do hope that we have gotten to that 122. Will, if not, then you did not do your job very well, because we closed at 121,900.
Okay.
Yesterday.
I have to say that you're wearing green today, so yes, your wish came through. Very true, because you called and the market answered. Right now, we've hit
I'm
a
a
new
market
high.
caller now.
Just guess where we are right now.
125.
123. Where are you going? Don't be greedy. We're at 123.
Let me get greedy,
Yeah,
please.
just get greedy. 123 at.
Oh, that's beautiful.
That's
so
beautiful.
we hit the 120.
No,
but
we're
not up to 123.
No, it's just right before I
when
came
you
on.
got the numbers,
yes,
it was
right before I came on air,
900.
I got the information that we had hit 123.
Wow, nice.
And that's over 1%.
That's some money to some investors.
Yes, and one of the drivers, the banking sector, is really on fire, really on fire.
Yeah, I think the forbearance pause that the CBN put just to allow the banks, you know, catch their breath since we're almost at the end of recap. I think that's really helping them to
It's really
find
helping
their
the banks.
feet,
Really, investors are really taking this opportunity to position themselves in the bank, and especially GTCO. We know that they listed on the London Stock Exchange. And
yeah, that's a big one.
Now,
I know we're expecting results.
Oh yes, we are expecting.
I think that's also another news that's driving investors' sentiment.
The market is really like I'm trying to catch my breath here and keep up with the markets, but investors are really not letting this be. But let's just see how the market closes. 123 at intraday, but we'll see how it ends. Major stock markets in Africa were positive, trading at strong levels at intraday. Nigeria's NGX traded over 1%. As I mentioned, it hit over 123,000 points at the time I'm speaking. Currently, we've hit a new high, and demand in banking stocks, Zenith Bank, GTCO are trading at their year high prices. Zenith Bank is trading at about 61 naira 50 kobo, and GTCO at 90 naira. Also from the consumer goods space, we're seeing a Nigerian breweries gaining 10%, and see demand outweighing supply. So you can imagine what that is doing in the market right now. Now, let's look at JSE in South Africa. It's trading up 0.69%. Elsewhere, we see Egypt's EGX also in green territory, up 0.38%, and Kenya ended Wednesday's session in negative territory, down over 1%. The first negative session after several positive sessions. Well, let's take a breather now from equities. Let's take a pause and look at what happened yesterday. We had the Nigerian Treasury bills auction, and we have the results. Chukanwa Chuku, Chief Dealer and Group Head Trading UBA, is with us this afternoon to discuss that and more. Chuka, good afternoon. It's good to have you.
Good afternoon, Will.
Chuka, we see the 91, 182, and 364-day paper from the Treasury bills auction. They were all oversubscribed with stop rates at 15, let's say, during the range of 15 to 16%. What does this tell us? What does this demand from investors tell about the sentiments and liquidity in the markets?
Thank you, Will. Like you mentioned, the NTB for yesterday was hugely oversubscribed. We have less than 300 billion on offer, and then over 1.1 trillion was the subscription, and then DMO sold slightly lower than what was offered, and so that shows you the demand in the system. The demand is in two ways. One, you have liquidity, of course, playing a major role. System liquidity, there are a lot of OMO, and as well as NTB maturity this week. So well over 600 billion matured. And then, of course, investors want to reinvest some of these maturities back into the fixed income market. And so we saw liquidity play a major role. The second one is the fact that the government through DMO has shown the appetite that they are not aggressively looking to borrow from the local market. And then so the yields are not as favorable, or as they're not in panic mood. Let me use the word. So the yields, they're willing to to bring the yield down as much as they can, so that the cost of borrowing will be less in terms of payment, debt repayment. And so we've seen yield drop well over 200 basis points, especially for the 1 year auction view of yesterday. We saw it dropped about almost 250 basis points from the where it opened the last time, where it closed the last time. So this has actually affected trading today, and then we've seen market trade below 15% for 1 year, and then that's obviously will start the course for tomorrow, and then obviously subsequently next week.
Definitely, we might see this downtrend, persist, especially when the CBN meets much later this month to discuss, rates, and possibly a rate cut might be in the offing. But let's look at what's also happened in the markets. FMDQ has just reactivated that interbank two-way quote system for the fixed income secondary market. Can you briefly explain what this is about and what this will mean for price discovery in the markets?
Yeah, so thank you very much. Prior to now, about 7-8 years ago, the fixed income market as well as the FS market was traded in what we call two-way quotes, where a bank calls for bid and offer quotes, using the platform. And now it's we're using a Bloomberg. Then it was Reuters. And so basically, what it means is that you're meant to show an offer, and then as well as show bid. So the counterparty can either pick your offer or dump on you, as we call it, depending on what the counterparty intend to do. So this was stopped, not officially. It was stopped because market became illiquid. Of course, also as a result of the economic situation at that point in time, and so market became illiquid, and then of course we had a situation whereby traders, we default, which is not good for the practice of the market. But now with the CBN and then of course FMDQ partnering, mandating that traders, banks should go back to two-way quotes. That is what we've seen over the past 1 week. Now the advantage of this two-way quote thing is the fact that it will bring a lot of professionalism into the system. That's number one. Number two, markets will be more liquid, price discovery, will become, something that is what will become, a good thing in terms of, trying to know what the market is all about. And most importantly, market will be liquid. And so because before now, basically, what we've seen is that the major players, play more on the brokerage side. Now it's more transparent. It's more, the traders are able to know what exactly market is doing. And so for me, it's a good thing. It's a good development. The system will benefit largely, due to the fact that the markets will be liquid, and then investors will have more confidence, coming into the fixed income market.
That's fantastic news. But we do know one of the key rules of this two-way quote is that there's a spread cap of ₦1 per 100 naira value. How does this lead to? Does this spread, this cap of ₦1, would it lead to tighter bid-ask prices and better pricing for investors, especially?
So the basic thing, one of the fundamental or the major advantage of this two-way quoting is the fact that there's professionalism. So, for example, each instrument for Treasury bills, you have a minimum. You have a particular spread. For Treasury bills, you have a 250, which is the trading volume on the RFQ. RFQ means a request for quote. And then for the bond side, you have a 100 million per trade, which is the trade volume now. And the bond is traded on the benchmark, which means you load your prices and then you allow the counterparty to either pick on you or dump on you. And so now the spread, which like you mentioned is a ₦1 spread, will cut across board. Everybody knows that this is nobody is going to default on that, and that's the beauty of it. And don't forget that this market is traded on the Bloomberg platform. And so the platform itself is very transparent. Whatever it is that is done on the platform is there for everybody to see. And like we say, as traders, your word is your bond. So if you do a trade, there's no way you can default on it. You must be able to settle that trade. So basically, it's all good for the Nigerian market, especially the fixed income market. The transparency will come back, liquidity will come back, in terms of flow, and then the market will be very liquid as well.
Definitely, there will not be arbitrary profits. Nobody just setting any rate in the market just by having this two-way quote, which is fantastic for good news for investors. Now, the borrowing calendars, we saw that yesterday they were out 2 days ago. What is your outlook now, looking at the market for the second half?
So if you see the borrowing calendar, you will notice that it's also in line with what we discussed earlier as regard a trend in yield. Yield is trending downward, which means that the government is not so not so pressured to borrow. Now the calendar, if you look at it, you see that about 1.9 trillion within this calendar period will be maturing, and then less than that is what they are offering. So what shows you that the government itself is not, like I said earlier, is not pressured to borrow much. Now, what are we going to see? This yield is going to continue to drop. Earlier, sometime in February, I said that towards the September ending, we see a drastic drop in yield. However, it's not enough to that because we've seen yield drop well over 400 basis points between April and now. And so this is going to continue to drop more. The thing about fixed income market is that it's an opportunity market. If you don't get in when you're supposed to get in, what I mean is if you don't buy when you're supposed to buy, you get into problem. If you don't sell when you're supposed to sell, which is getting out, you get into problem. So from now, a lot of those who bought at 21, 22 levels, obviously are selling off. And then because the market itself, the liquidity obviously drives the market. And so you'll see maturities every week, every month. And so most of these investors wouldn't want to just allow, the liquidity just stay by, especially with inflation issues. So they will want to reinvest it. So what you now see is that you see bullish sentiment all over, and the market will continue to buy, and then yield will continue to, to trend downwards. And that's obviously what we're going to see between now and then, probably October and then towards the end of the year.
Okay, from what you're saying now, are you expecting when the CBN meets that maybe are they going to hold or cut rates?
I think with the what's inflation figure, don't forget CBN decisions are strictly or mainly majorly on the inflation, what inflation is doing, and so the last inflation came out okay. For me, I think that they probably will just maintain or probably cut rate by about 50 basis points. It's too early to tell anyway, but I think they will work within these two parameters I've just mentioned.
Thank you so much, Chukwuemeka, Chief Dealer and Group Head Trading UBA, for sharing your perspective on the show.
Thank you very much.
So let's look at other stocks now. In the Gulf region, we see them trading mostly negative at intraday. Dubai was down 0.07%. See that on the screen. Abu Dhabi also trading almost flat in negative region, 0.01%. Now, still within the region, we're seeing Saudi, that's the Tadawul exchange. That's the outlier there, up 0.04%, and Qatari index down 0.02%. Let's check in on US now and see stock futures, how they performed in pre-market trading. Little changed with S&P futures down 0.05%. You see that up there. NASDAQ up. That's flat, but in green territory, and Dow futures slipping 0.12%. Traders are shrugging off fresh tariff moves. They're not taking it so seriously, focused on strong tech momentum as we speak. Wall Street rallied yesterday's Wednesday, and Nasdaq closed at a record high after Nvidia briefly hit a $4 trillion valuation, fueling investor optimism around AI, artificial intelligence. Now, this came despite President Trump announcing a 50% tariff on copper imports and Brazilian goods effective August the 1st, citing trade imbalances and the Bolsonaro trial. Brazil's President Lula has pledged a proportional response to that, though. Now, some investors believe that the AI boom could offset tariff effects. Fed minutes are out Wednesday. It showed a split on rate cuts with inflation and trade moves under watch. Investors are now also eyeing the Q2 earnings season. Delta shares jumped 11% pre-markets after a strong earnings beat and 2025 outlook. Let's look at Asia now, how they perform, how they close today, Thursdays. Investors are assessing that it was more of a mixed trading for that region. Bank of Korea's decision to hold rates are still in focus for investors. They're skimming that, as well as U.S. President Donald Trump's announcement to slap a 50% tariff on Brazilian imports beginning August the 1st. Japan's benchmark index, we see down 0.44%. We see also Kospi in South Korea bucking that trend, up 1.58%, and the Hang Seng in China also up 0.57%. Look at mainland China. That's Shanghai index. It also rose 0.48%. However, we see the Nifty 50 India down 0.47%. Mixed trading, mixed reactions to Trump and the economic data coming out of that region. So, but I know that the FTSE hit a record high today, and DAX also was in the up highs. Every other markets are reacting positively to this, but we'll see how maybe Lars will have something different to tell us about that. But I know that they did hit a high.
Yeah, well, congratulations to the FTSE. But it's also good news in Europe,
yes, it's good news,
Will, at this time. So everybody seems to be getting used to the talks on threats of tariffs.
It's more like,
you know,
back,
it's a numb
no
now.
bite
kind
of situation now.
All right, thanks, Will. So over in Europe, the markets in Germany seems to be doing well. They set an all-time high yesterday. Lars told us about that. The DAX in Frankfurt is retaining that level, and that's despite all of the tariffs and the chaos. No deal yet between the U.S. and the EU. The talks are still being expected to come to a pleasant end, but investors are looking in with strides. But let's have Lars join us now. But Lars is interested in the automaker this afternoon, Volkswagen. They have some new numbers that may be telling us how they're doing in the market and beyond that. Hi, Lars. I know you love cars. What's going on with Volkswagen?
Thanks for having me. Well, they are actually pretty good, at least at first glance. Volkswagen says they saw electric vehicle sales climb 14.3% during the first 6 months of the year to 193,000 vehicles. Now, these are the global numbers, whereas in Europe, sales were up an unbelievable 70%. And maybe even more important for the company, they're way better than Tesla's sales. And Tesla, mind you, used to be the #1 brand in the segment. For years, they were the technology leader. They were a fashionable brand. All that, of course, before CEO Elon Musk waded into the political swamp around Donald Trump. He ruined his reputation, dragged his company with him. Anyway, today, Tesla still has the most popular single model on the electric vehicle market in Europe, the Model Y, that is. But they just sold around 10,000 of them last month. And then the next 4 spots on the most popular list are all Volkswagen models. There is the brand new Skoda Elroy with over 9,000 sold in May. And then it's the VW main brands ID.7, ID.4, and ID.3 with between 6,000 and 7,000 cars sold each.
So what does this tell us about the future of Volkswagen?
Well, I would assume that the mood over in Wolfsburg is a lot better these days, yes, but there's still a lot of problems for the company to fight through. And those latest numbers I just gave you, like I said, they're only really good at first glance. If you dig a little deeper, there are a few unpleasant details. Let's take a look again at that sales number, a plus of over 14%. That is great. However, that's compared to last year. And last year had been an enormously bad year for Volkswagen and for the sector in general. The German government had ended the generous electric vehicle subsidy and sales dropped steeply. Now, with these gains over the past 4 months, Volkswagen really just won some of the sales back that they had lost. And the other problem, margins are really tight. 0.5% for those models sold in the first half of this year. That's as Volkswagen ran some very successful sales programs. Now, those were obviously great to get people to buy a car, but they also cut into profits at a level that would not be sustainable for Volkswagen in the long run.
Yeah, unfortunately, but I'm sure something can be done before then last. Thank you so much for the update. All right, now let's head to Africa. Africa in the U.S., because the United States President Donald Trump is hosting presidents of Gabon, Guinea-Bissau, Liberia, Mauritania, and Senegal at the White House. I wonder why Nigeria is missing. Well, I guess President Trump is very strategic about this. The meeting is focused on business opportunities as African leaders they seek partnerships to develop their resources. During the lunch that they had at the state dining room, Trump says that the leaders hail from very vibrant places with very valuable land, great minerals, resources as usual, great oil deposits, and wonderful people. These are the words of President Donald Trump. The U.S. International Development Finance Corporation said that the meeting would provide project development funding for the Banyu Potash mine in Muyumba in Gabon, helping Gabon reduce its dependence on imports. I guess this is where that talk comes in. Africa, know what you have and know what you can use it to get. But let's listen to a bit of the meeting.
The Congo and Rwanda, and we had some other people up from Africa, and that was the first time, but that's very nice. I appreciate the questions. Very nice, actually. Would you like to, at some point I would like to go to Africa, absolutely. We're going to see what the schedule is, but at some point I would like to do that very much. Would you like to give a fast answer, please?
Thank you very much. Microphone, please.
Please.
Of course, on soutient cette dynamique. We are in favor of this dynamic for peace. We are very committed on peace. I am the first head of state who went to Russia and who went to Ukraine both since the start of the war.
That's a bit from that meeting there. Isn't it interesting? President Trump said he would like to come to Africa. So I wonder what country he would go to first if he were to come to Africa. Well, you know, President Trump is not a lot of friends. He doesn't have a lot of friends over in Africa. He's not very sympathetic with us. But we'll see. We'll see if President Trump will come to Africa before he leaves office. So let's move to South Africa now, where cane growers, which represent 24,000 small-scale farmers and 1,200 large-scale growers, they've expressed deep concerns about a new 30% tariff, talking about President Trump again, on South Africa sugar exports to the U.S. That's supposed to take effect from the first day in August. Industry leaders fear that this punitive tariff would render South African sugar uncompetitive in one of its most crucial markets and threaten the livelihood of millions who are reliant on the sugar supply chain. SA Cane Growers Chairman Higgins Mdili highlights the urgency of the situation, insisting that the South African sugar industry poses no threat to the U.S. market. And he said that the 30% tariff was particularly alarming for local farmers, as it will make South African sugar less competitive in the United States market when compared to heavily subsidized competitors like Brazil, India, and Mexico. Let's talk about nickel now with Rosemary Hira, our financial derivatives company analyst, joins us virtually from Lagos. So we've seen, looking at nickel, the prices have dropped more than 67%. Always a good news to hear that, at least for from the consumer's perspective. This happened over the past 2 years, and nickel is key, of course, to the new innovations and technology of these days. Let's find out why it is cheaper and if this is sustainable with Rosemary. Hi, Rosemary. Welcome to the program. So do we know what drove the price of nickel down?
Good afternoon, Ini. Thank you so much for having me. So the reasons why the price of nickel has been dropping from its peak in March of 2022 from about $45,000 to $45,000 per ton to about $15,000 per ton recently. So Indonesia, the country that boasts of the largest nickel deposits in the world, actually made some very massive investment in its nickel downstream sector. So now there is a lot of a production of refined nickel, coupled with an export ban that it had initiated in 2020 for raw nickel exports. So now there is a lot of supply of refined nickel in the market. So this has dragged down the price, coupled with the fact that demand is also subdued. So there is a cheaper alternative to nickel in the production of electric vehicle batteries. So there is an alternative called lithium or phosphate. So that is used to create a cheaper version of electric vehicle batteries. So with subdued demand and also oversupply in the market, this is what has caused the fall in the price of nickel globally. And this is going to continue, given the fact that demand still remains subdued and supply is going to increase well over until 2026 and 2027.
Well, I mean, saying that the drop will continue, I thought that more people were getting into the path of renewable energy and electric vehicles, and so we can expect that demand would increase. And especially in a country like Nigeria, we see a lot of switch, you know, because of availability of power from the grid and all of that. So I thought this will feel more demand of nickel.
Well, Ini, to an extent, the decline in nickel prices would help to make, let's say, cleaner, renewable energy more affordable to many Nigerians. Yes, indeed. But affordability is not the only issue. Finance and access to finance is another key thing that we must consider. So many Nigerians are multidimensionally poor, about 63%. So apart from the price is not the only thing that determines demand, actually. So we also have the income of the consumers, and the standard minimum wage in Nigeria is about 70,000 70,000, when you compare that to the price of, let's say, an electric vehicle or like a solar power inverter. So not many people can afford these things unless there are initiatives to help people access finance to maybe switch to more renewable energy and targeted policies from the government. So that's what will be able to help the drop in the price of nickel and help Nigerians to like switch to a more renewable energy.
So I wonder, because I mean, Nigeria does have potentials in this area, as with many others. We have estimated 5 million tons of nickel, and that's 35% of recent global annual supply. That's a huge one. Do you hear talks about perhaps Nigeria exploring some of this, maybe adding value to it?
Well, it is quite impressive that Nigeria has about 5 million tons of nickel, but largely it is untapped, and there are no conversations about going into explore this natural resource. It's not just nickel; it's copper and a host of other metals as well. So what we need is initiatives and policies from the government and private-public partnerships to within the nickel subsector to help companies come into the country and explore those resources and also to refine those resources. This will help to increase efficiency in that sector, competitiveness in that sector, and to also help to drive down the price and make Nigeria a key player in the nickel sector globally. And also it is also going to spill down to the byproducts and adoption of the byproducts here in Nigeria. So if nickel prices are coming down, it's locally produced, so this will help other businesses to start up, like creating solar panels here in Nigeria is going to be more cheaper, and also the adoption of electric vehicles, which is also another aspect of cleaner and renewable energy use.
All right, Rosemary, thank you so much. Another area of potential which we hope will get the attention of policymakers.
Thank you, Ini, for having me.
All right, let's head to Kenya now, where domestic debt market has opened for the full year 2025-2026 on a bullish note, with investors shifting decisively towards long-term bonds amid falling short-term returns and a more accommodative monetary stance. This auction follows the end-of-year reopening on June 23, where CBK, as Central Bank of Kenya, tapped the market for 2020 and 015 15-year and 30-year. That's sale netted 71.64 billion Kenyan shilling on the 101.36 billion in bids. That's a more than 202% performance rate, confirming that institutional appetite for duration was already well in motion. In contrast to that, the short end of the curve continues to lose traction. Weekly T-bill auctions leading up to the bond reopening saw declining enthusiasm. On July 7, CBK accepted 21.77 billion Kenyan shillings, but only 182-day paper was oversubscribed. Still in Kenya, the African Development Bank, the AFDB, is asking for reforms that would broaden fiscal revenue, formalize the informal sector, deepen financial markets, and maximize the country's human resource dividend to enhance Kenya's ability to mobilize its own capital for development. In its newly released country-focused report for Kenya themed Making Kenya's Capital Market Work Better for Its Development, the bank notes that these reforms are crucial to driving strong economic growth and improving domestic resource mobilization. The bank's country economist, Caroline Tumwa, observes that despite Kenya's progress in infrastructure, finance, and services, the quality of capital remains weak, with fiscal capital burdened by high levels of debt and uneven financial access. The CFR report reveals that the nation's economy is projected to improve at a 5.3% growth rate in 2025, driven by enhanced agricultural productivity, growth in the services sector, and the implementation of government policies aimed at increasing growth through the country's bottom-up economic transformation agenda. And still in Kenya, to boost research and bridge data gaps experienced over the past 5 years, the Kenya National Bureau of Statistics has launched 2 strategic tools to strengthen the country's data systems. The move comes amid growing demand for accurate, timely, and policy-relevant statistics to help address pressing issues like climate change and broader social development challenges. The strategy aims to improve data quality, ensure consistency, and enhance coordination among various government and non-governmental agencies over the next 3 years. We go over to Rwanda, where the government is rolling out 280 billion of its local currency worth of digital acceleration projects funded by the World Bank, and it's aimed at significantly expanding broadband access, digitalizing public services, and enhancing inclusion across key sectors such as health, education, and agriculture. According to the World Bank, one of the project's core pillars is increasing access to digital services, especially in underserved areas and among marginalized populations. This includes targeted interventions to address key demand-side barriers, such as lack of internet connectivity, unaffordable smart devices, and limited digital literacy. Let's head to Ethiopia, where that country coffee has brought in a record of $2.65 billion in revenue during the just concluded Ethiopian fiscal year. This is according to the Ethiopian Coffee. Ethiopia supplied 468,967 metric tons of coffee to the international market to generate revenue during the period of 2024-2025 fiscal year. And they say the volume of coffee exported in the 2024-2025 fiscal year rose by 170,478 metric tons, while the revenue grew by $1.226 billion when compared to the previous fiscal year. Let's do crypto now. We saw a bit of green, not a bit of green, some green in the crypto space earlier today. It's still retaining the green, but we lost some money there. I know it was up to 112,000 earlier today. That's the price of Bitcoin, but we see at this time it's 110,815. So we lost a bit of that. But when you compare to the 24-hour, we see that we're still in green. Ethereum is also in green. Yesterday we talked about institutional investors. More transaction. Emirate, for instance, is proposing that there'll be transactions, its transactions on cryptocurrencies. So it seems all of that is feeling positive sentiments. And so we see a green board at this time. Ethereum is green. XRP is green. XRP also has some news. I think we'll get to that in a bit. BNB, TR, Cardano, almost everybody or every major coin seems to be doing green at this time. So other than the price, let's see what's happening as headlines. So yeah, Bitcoin reached a new all-time high against the US dollar on Thursday. It's climbed to over 112. There you have it. Because of those things, I talked about more institutional investors that led that. XRP also following closely. It nears $2.50, and it's propelled by new holders, reaching a 4-month high. So we see more people having confidence with the altcoin or in the altcoins also, and so that drove that. New addresses continue to join the network. Demand for XRP is expected to rise even further, and that, of course, is driving that. India seems to be another factor that might be fueling the price to the positive side. A call by a prominent member of India's ruling party to establish a strategic Bitcoin reserve for the country. That, of course, is another good news that might increase demand for Bitcoin and other cryptocurrency, and that has stoked debate among digital finance experts. But I mean, it's a positive conversation going on right there. Another headline we have there is Jack Ma backed and processed over $1 trillion in global transactions last year and is seeking stablecoin licenses in key markets. We talked about stablecoin earlier today on the program. So crypto seems to be getting a lot of positive attention from different, big guys that can move the market. And then we see A court has ordered the seizure of Binance crypto virtual money held in accounts after it concluded that the activity in that account was not regular. The chairperson of Assets Recovery Bureau and the police commissioner filed a non-conviction-based confiscation against. So while we see good news on the one hand, we also see the not so good news, things that might lead to some questions to adoption of it. That's also happening. A bit of, from the entertainment hip-hop legends, Snoop Dogg's latest NFT release sold out in half an hour. So this is a walking celebrity coin. You might want to see it. I don't know if you've been interested in it. You see how President Trump and his wife, you still have their coins right there. But Snoop Dogg did good. In half an hour, he generated millions through Telegram and putting the platform's blockchain-based features to the test. So that's it. A lot of good news, one bad news. I don't know which one you want to take. It's all up to you. But that's it on the program. Thank you so much for being a part of Business Incorporated today again. We'll have another day tomorrow, so don't miss it. I'm John Mekwa. Enjoy the rest of your day. Bye-bye.